Good afternoon to our CLA family members, clients, community partners, and friends. Welcome back to our fifth live stream. We are so grateful to have all of you joining us, and we wish you, your families, and friends health and safety during this time. Today, we are having a follow-up session to provide you with an update on the latest developments on the Paycheck Protection Program, or PPP, under the CARES Act. For those of you who were not able to join us last week, the PPP is a focal point for small businesses under the CARES Act, which was signed into law by President Trump just 11 days ago. The CARES Act includes several provisions totaling over $2 trillion in stimulus intended to help organizations, individuals, states, and municipalities. The bill was 880 pages long and provides various small business lending, emergency funding for hospitals and healthcare providers, tax incentives, and unemployment provisions. Last Tuesday, you heard Todd Sprang and Jack Rybicki discuss what we expected to happen with respect to the PPP. Wow, how fast things have moved since then. A housekeeping reminder for today, we do have subject matter experts available on the chat pod to respond to your questions throughout the live stream. And additionally, please feel free to contact your CLA advisors with follow-up questions using the links in the dialog box below us, or submit questions via our Contact Us feature on our COVID-19 resource hub on our website at claconnect.com. As you will hear, things are moving fast and furious in the world of PPP, so please know that the guidance is changing regularly, and it's important to make sure that what you think you know is still current before applying for a PPP loan and as you manage the process. With that, I would like to welcome Todd Sprang from our Financial Institution Group and Jack Rybicki from our Real Estate Group, and they're the professionals leading our COVID economic relief team. They will walk through the latest developments on the PPP. Welcome, gentlemen.
Hi, Jen.
Thanks, Jen.
When we spoke last, the Treasury was saying small businesses and other qualifying organizations would be able to apply for PPP loans on April 3rd. We were skeptical if that timing was feasible. Todd, please let us know what's actually happened since then.
Sure, I'll give you a quick update, Jen. I'll touch on 2 points that I talked about last time. First, let me talk about the network of lenders, and that we talked about the fact that there were media reports that would expand. That is expanding a little slower than maybe we thought, as I think those additional lenders waited for guidance. So really at the forefront of this process were the 7A lenders that we talked about that were in the current network. Second, one of the things I talked about was the guidance with the lenders, right? And that interaction of guidance and how the process would start out. So we've gotten a lot of guidance, just as I thought. It's coming out in different stages and streams. You know, you can only start the process once you start the guidance, but a lot of good things have happened over the last week. So Treasury has worked out guidance with the banks. Borrowers' applications were issued. They were modified a couple times since then, but that's continued to flow and seems like it's gotten a little bit better. And when you look at Treasury and the SBA, they've continued to issue that guidance, as I talked about. It comes out in stages and different FAQ documents that clarify. And I think that process is only going to continue as we move along here in the near term. Even though we're moving fast, that guidance keeps moving also. And then let me talk just a little bit about that application process, because we talked about the fact that the time that it was expected to begin, that all borrowers were expected to begin to be able to apply on the 3rd. And I think some of that information flow and I'll say some systems issues have caused that to stagger a bit. Now, that's been a bad thing because it's created some uncertainty in the interaction between the borrowers and certain lenders regarding taking applications. But I think it's also been good in that it didn't mean everybody hit that infrastructure at the same time. So we saw some applications starting on the 3rd, some moving on later in the 3rd, and some starting yesterday on the 6th.
And how is the process going thus far?
Well, I think it depends who you ask, but I think as expected, it's a bit chaotic. And there's obviously some confusion and diversity in practice. The banks each have had to, depending on their size too and complexity, have had to adjust. And they've had to create forms and determine, like, all that guidance that's been coming through, quickly react and adjust their applications and their processes. So that's maybe caused a bit of frustration on the part of the borrowers, and we understand that. But I think we're making much better progress now. what you saw was a heavy volume of activity. That's been tremendous. I mean, think about Bank of America. There were reports that on the first day they took nearly 100,000 applications, and when you looked at the dollar amount, it was about 10% of the total program amount. And I think also regional and community banks have seen activity, and I think that's continued to grow. Last, I think what you're seeing too is because of that process and that demand, that high demand that I talked about last time, what you've got is current institutions are saying, I'm going to first take applications from my current customers and then non-customers. And let me just briefly touch on that a little bit, because I think that's caused some issues too with borrowers. Those are caused by three things. Infrastructure at the institution. They've only got so much bandwidth to process applications. They're taking current customers first. Second, there's regulatory guidance that if you're a new customer to a financial institution, they have to go through an additional process. There are BSA requirements, other regulatory requirements about information that they have to collect on you before they can start. I think that causes that process to take a little longer, and so they started with current borrowers. And then when I look at things like, I'll say other announcements that have caused people, that's what's caused the frustration is when lenders kind of shut that down and move that off, they're wondering where do they go in this environment. So I think that creates a little, I'll say a little consternation among the borrowers about where to go if their lender is moving slowly or puts them as second in the line.
Well, and one of the questions that just popped up in the chat pod is that, the information is that Wells Fargo is not taking any more submissions for the PPP. Other banks are requiring you to have that prior account. What are the recommendations you have in that case?
Well, I think if you go ahead, the Wells Fargo situation was a little bit unique in that they've got some regulatory requirements that were restricting them, right? But I think I think what's going to happen is as the process evolves and maybe some of the infrastructure, there is flow. There are lenders out there who are taking non-customer apps, and I think they're just hard to identify right now, and that can turn on and off like the faucet that we've seen with current customers. So I think patience, stick with your current lenders, but keep your eyes open for other lenders. Jack, I don't know if you have thoughts on that process also.
Yeah, we are seeing though that there are some lenders around the country that are taking on new clients, and I think it's important to ask a lot of questions to your lender up front to make sure that you understand whether or not they're going to accept your application. We'll get into a few instances where we heard applications get rejected for things that should have been allowed, and so have those conversations on the front end. Make sure you understand your lender's position, and if they're available to loan to you, and if not, find alternative sources sooner rather than later. Yeah.
I think that's super helpful. And Jack, it's nice to have you weigh in on this because I think that is probably one of the hot topics of the PPP. I know your team has really been working with the clients on the loan application process. Could you talk to us a little bit more about what some of those hot topics are in the application process? Sure.
Yeah, I'd be happy to. So as Todd mentioned, the last 7 days have really seen a whirlwind of activity, and the guidance has changed. I hesitate to give guidance today because by the time this live stream is over, my guess is that something I say is going to be outdated already. With that being said, though, we did just get a release from Treasury last night on a number of FAQs that provided a lot of guidance on a number of topics that were giving the borrowers and the banks significant trouble in terms of how to process the loan applications, how to calculate some of the amounts and things of that nature. So I'll go through those in a little more detail now. So the first topic was on eligibility, and there was some confusion on whether or not the alternative size standards under the SBA's rules with respect to revenue limitations needed to be applied. Some banks were interpreting it that the revenue thresholds could not be exceeded in those alternative size standards. Fortunately, Treasury confirmed what we thought was obvious in that the size standards are not necessarily, on terms of revenue, the limiting factor. And as long as you have less than 500 employees or less than the threshold established by your NEICS standard, you do qualify for participation in the PPP. Now, one thing to note is that you do have to worry about the affiliate rules there, and so that might not just be your company that has to come in under those employee counts, but it was good that Treasury issued that clarification. The second thing, which was really hotly debated in a number of circles, had to do with the $100,000 limitation. So for those of you that were familiar with this issue, there was a question as to whether or not the $100,000 limitation for what is includable in the average monthly payroll cost for an individual should have been applied at either the salary and wages level, or if it applied to compensation, which was not a defined term, as a whole, but compensation included retirement benefits, other group health, as well as salaries and wages. Fortunately, Treasury clarified this, and it is now very clear that the $100,000 limitation only applies to wages, and it does not limit the inclusion of those other things for either employees below or above $100,000. So that was great clarification to get, and something that was very important to get for the industry. One other big topic that was out there was gross versus net reporting, because in the guidance of what was included in payroll costs and then what should be excluded, there was a reference to some code sections that were essentially FICA and federal withholding tax. And that created quite a bit of confusion in the marketplace on whether or not gross wages were includable, or if you had to net out the employee portion of FICA and federal withholding. And in some places, it even made reference to you could do it gross for sizing of the loan, but you may have to do it net for testing your expenditures of the loan, which could have caused a significant issue as well, given the new 75% threshold that we'll talk about later. And so fortunately, everything was clarified in this latest guidance from Treasury. We believe it is gross presentation on both the sizing of the loan and on the forgiveness of the loan. And Treasury clarified that it is the employer portion of your federal taxes that cannot be included in the calculation.
Yeah, those are some really important things, I think, for us to get clarity on, just because they fundamentally impact the ability of the company to participate in the amount of the loan they can receive, right? So are there any other really important topics that now we know that we didn't before?
Yeah, and again, I'll stress that we know these today, or at least as the time we wrote the script for the live stream, right? So, the first one that is very important to folks with international operations is how do you manage, or how do you do the employee count, and what should be included in that? And so the guidance was very clear that when you're doing your employee counts for measuring eligibility, you only include employees whose principal place of residence is the United States. So that's great. And even under the affiliate rules, where you may have a foreign parent and there's foreign affiliates, when you have to look at employee count overall, all you have to do is count the U.S. employees in both the domestic and international affiliates. And so very good clarification there that is going to help out our folks with international ownership, but significant operations here in the United States. Another item on employee count, though, is that there was a clarification in terms of how you do employee counting for the eligibility requirements, because employee counts are really two components used in the Act. The first is to determine eligibility, and then the second is to determine forgiveness. It was clarified that from an eligibility perspective, it's really a head count. So from that perspective, a part-time employee, a full-time employee, and a salaried worker all count as one when you're measuring eligibility under the program. Now, when you're measuring forgiveness, which we're going to get into in another seminar, that is going to be done using full-time equivalents. And so there is a difference between measuring eligibility and forgiveness. I've already mentioned that non-U.S. owned companies, it was clarified that they can participate, but only to the extent of their U.S. workforce, which is includable in both sizing the loan and the allowable expense piece of it. The Treasury did reaffirm, and they had given us some guidance on this a couple days ago, that the affiliate rules still do apply. I know that that was a hotly contested issue, and there are a number of groups that are out there trying to lobby, particularly private equity and other venture capital that have controlling interests that would like to see this not measured at the affiliate level. The issue with that, though, is because the affiliate rules were kind of baked into the CARES Act, I think it's going to take an act of Congress, literally, to change those rules in this case. Two other points that I'll bring up quickly: payments to independent contractors. There was some confusion on this, but any payments by a company to independent contractors or sole proprietors should not be included in the company's application. The reason for that is because those sole proprietors and independent contractors have the ability to file their own claim under the PPP Act, and those will start on April 10th. Last but certainly not least, there was a lot of our clients, particularly small businesses, that use PEOs and employee leasing services. Mm-hmm. And we did get clarification that PEO employees are includable in the application of the company that leases those from that third party. So some real good things there. But Todd, maybe from a lender perspective, you have some thoughts about other areas where the clarifications in the Treasury standards helped.
Yeah, what I would say in general, Jack, is when you look at those clarifications, they were causing the needle to move right with respect to eligibility and loan amount. And I think institutions to varying degrees feel comfortable guiding their borrowers in that sense. You're going to get some are going to be very open and transparent. Some are going to be a little more reserved because they don't want responsibility, especially as those answers to those questions impact the amount of the loan that you're eligible for. They're a bit more sensitive to that. I think a bit more assisting on eligibility.
So let me ask you guys a couple of questions that are coming in the chat pod that we're seeing quite a bit of. Someone just asked if we need to update our application based on the guidance that you're providing today, especially if it's already been approved. Do you guys have thoughts on that?
Yeah, I mean, it actually was addressed in the FAQs that you do not need to update your application, particularly if it was approved. The issue is that you may have been sized under a more restrictive, let's say $100,000 threshold that was applied at the all-in compensation level. And as a result of that, the loan size potentially is not maximized, but you can only have one loan under this program. And if you've already been funded, you do not have the ability to go back. So you don't have to do that. Now, I would say if you're in the application process, reach out to your banker, right? I was working with a nonprofit organization locally here in Tampa. We had submitted an application, but when the new standard or the new FAQs came out, we resubmitted. The bank had changed their view in terms of what was includable under the limit, and we were able to increase the size of the loan by roughly $40,000 as a result of resubmitting that. But that had not gone through the approval process yet, so it's important to understand where you're at in the queue. I would say speed here is very important, right? We talked last week about the thought that this $350 billion, which sounds like a huge number, is going to get eaten through pretty quickly. And we still feel that that's the case. And so I would, if you're in the queue and you're already submitted, I would be somewhat hesitant to withdraw your application at this point for a few $1,000s, knowing that you might not have the chance to get back into the queue at some point in time.
Well, and as you're talking about speed, Jack, another question that's popping up that's probably relevant and quick to address right now is, what is the timeline that we're seeing from application to approval, or does it just depend?
It does depend on the bank and the volume. I mean, so Treasury reported, though, that $4.5 billion worth of PPP loans were funded on Friday, which was the first day of application. So Secretary Mnuchin actually was right. He said you could walk into a bank in the morning with your application and walk out with a check in the afternoon. And that happened, a number of times, obviously, since funding occurred on Friday. However, you think about a group like Bank of America, where we're hearing the volume of activity, 100,000 applications coming in. They have to have an entire infrastructure in place. And Todd, you can appreciate this from what banks have to do to approve a loan. That volume doesn't get digested overnight. And so, all the banks, particularly the larger banks, are seeing this huge influx of volume. And while they're ramping up, it can take some time to get through the process. And I think that's why we're seeing some of the community banks actually have fundings occur faster, because they have less volume and can move things through the channel a little bit quicker. But Todd, what are your thoughts on that?
Yeah, I would say you're right. You're absolutely right on the channeling of that application approval process, Jack. Where the community banks have maybe been experienced a little bit of a struggle is there's a 5-day requirement to disperse after that approval, right? And they just simply, especially the newer lenders, didn't have the form. So. Yeah. Well, what I have to do is give great kudos to you've got the SBA said you can use their form or use the bank's note. And when you look at those community bank organizations, those state organizations throughout the United States, they have assisted their banks in helping to come up with those forms so that they can be responsive and disperse those funds like everybody hopes will occur.
Yeah.
I think that's a lot of good clarity, too, from some of these questions that we're seeing in the chat pod. I know we're getting some good feedback about that. Jack, what other topics are still out there that we're looking for more clarification on that could impact this for people going forward?
Yeah, the biggest topic that we're still looking for clarification on related to the sizing of the loan has to do with self-employment earnings, right? So for partnerships where you've got somebody that's active in the business, those individuals are not supposed to be compensated using a W-2, but rather they get guaranteed payments or potentially just distributions. And what we're seeing is that there's ambiguity, and as a result of that, there's disparity in how this is being handled by the banks. Some banks are taking the view that self-employment is not included in the company filing because there's an opportunity for self-employed individuals to file independently on April 10th. Others are saying, well, if there's guaranteed payments, that's representative of the wage component, so you can use guaranteed payments. And then others still are saying, no, guaranteed payments plus profits should be includable, obviously all subject to that $100,000 cap. So this is the one area where we still are seeing disparity in how the banks are treating it, and it's because there's a lack of guidance out there on this. It would seem that self-employment up to $100,000 should be includable in the company's application. If you think about it, a small law firm, for instance, that has 10 partners that are all owners and 50 employees altogether, so they qualify, you could have one application that would include everybody, or potentially drive 11 applications, one for the company and one for each of those self-employed individuals, as a result of the way you interpret this. So we're looking for guidance on that. We hope Treasury comes out with that sooner rather than later. There's a mechanism for both to get included, but it's unclear right now.
So you bring up a good point, and somebody's asking about this also in the chat pod, which is with the disparity of treatment, should they be approaching multiple lenders regarding a loan just to see where they can get the best outcome?
We would definitely recommend that you understand the bank's position on these topics. And clearly something like this, it's $20,000 per person in your loan sizing, right? That's effectively the number for each $100,000 person that gets included in the loan sizing. So it could be a significant difference. And, from that perspective, you might say, yeah, it's best to shop between banks. I would argue, though, that having a relationship with a banker that can shepherd you through this process, even if they take a more conservative view here, might have more value than that extra $20,000. And that's going to be something that, from a cost benefit perspective, the individual companies are going to need to consider.
And Jack, let me add quickly. And if there's one thing to get that concession or that extra service on the front end and maybe that extra $20,000, would you exchange that for a little more understanding and forgiveness on the back end and working with you? I think that $20,000 might have some value sometimes, right? The relationship.
Certainly. Yeah.
Well, I feel like that's such a good summary of the hot topics and some of these open items. And thank you guys for being nimble with the questions from the audience. It sounds like there's some clarity for Burroughs on a number of critical topics, but we're still looking for guidance on others that we'll probably even be able to address in the live stream Thursday. As we get closer to the end of our session here, Todd, can you maybe bring us home with any additional thoughts on the PPP?
Yeah, I can do that. First, it's all about, we know the demand is there, and it's about what additional sources of funding will be available to keep this program going, right? We see the Fed stepping in or issuing some guidance or making some statements, right? Taking action. We see the folks in Congress, again, recognizing this, recognizing a need to act. I would say you have lenders also that are on the side of that, are in favor of that, because this is one of the tools that they can help existing borrowers in their portfolio. And along those lines, what I would close with is the importance, and I think Jack referred to it before, it's the importance of going to your lender ahead of time and establishing a line of communication and understanding expectations. Get that communication flow going, and you're going to have a smoother process, get your funds, and that's what everybody wants.
Yes, I think that's exactly right. Thank you guys so much for your time. I know this has been extremely helpful. Just as a reminder to the audience, we recommend that you contact your lender and your CLA professional for more information about the PPP. At CLA, we can help you gather the information to complete the applications and size your PPP loan request. So please keep that in mind. We hope today gave a nice overview of where things stand. Todd and Jack will be back with us on Thursday this week to provide more data on the program. In that conversation, they will be talking about tools to help manage the use of the funds once received, like CLA Intuition, which is a program that we've developed that provides some real-time scenario modeling and talks about the impact of various decision points on the financial recovery and strength of the organization. We also have just barely touched the surface on the all-important forgiveness provisions of the PPP, which need to be addressed as part of this plan, and they'll be spending some time on that on Thursday as well. So thank you to all of you for your questions. Thank you to our subject matter experts in the chat pod for engaging with the questions, and to the presenters for your insights. If you in the audience have additional follow-ups, again, please contact a CLA professional. Also, please use those links in the dialog box or on the COVID resource page at claconnect.com, and you can submit some additional questions that we didn't get to answer today. We'll get those questions directed to the right person and get you an answer as quickly as we can. So thank you all for joining us. Have a wonderful afternoon, and please stay safe and healthy.
Thanks, Jen.